Vamos con nuestra entrevista del día, la primera. Nos acompaña Teresa Keane, Product Director at Alliancebernstein. Thank you for joining us.
You're very welcome. Good afternoon.
Teresa, can you comment on the uncertain market environment and how are global equities performing?
Well, good afternoon, everyone. Yes, uncertainty has certainly been the dominant theme within the global economy, and it's certainly across financial markets. And what we're seeing is financial markets conditions overall have tightened. We've seen lower equity prices, of course, currency market volatility, and then also higher yields, pointing to, of course, lower growth and certainly lower growth in the next several months to come. We also expect, I suppose, volatility to continue as well. Looking at sentiment, and particularly business sentiment and consumer sentiment, we've seen a deterioration. And of course, while the correlation between spending and sentiment is somewhat imperfect, there are still early signs and evidence that consumers are indeed pulling back. And then when we look at the company level, what we're seeing is that some companies, and particularly US companies, are declining to give guidance and guidance with regards to what they expect for the future over several quarters to come. Where data is available, clearly that depends on how the policy regime is going to evolve, and we don't expect clarity on that for several months to come either. So all in all, it's been a very turbulent year-to-date period, and clearly there are still some questions out there in the marketplace today with regards to the role of the US, the role of the US dollar as a global reserve currency, and then, of course, treasuries as a risk-free asset given this policy-induced disruption. So as a whole, it's been quite a volatile environment. Equities through the end of April were down 0.9%. We've seen significant dispersion between sectors. So consumer discretionary and technology were weak. And on the positive side, we've seen defensives like utilities and consumer staples performing well. But we've also seen financials as well as industrials also performing quite strongly. But all in all, given the more positive, shall we say, discussions that has happened this week in the marketplace between US and China, we have seen equities rebounding. So global equities today and through the 12th of May are actually up 3%. So already a very different environment from the end of April. So we would say that you certainly need active management in this type of market in order to capture on that upside as well as mitigate that risk on the downside.
Teresa, how do you maintain conviction in earnings in this ever-changing environment?
Yeah, well, that's a very good question, because actually developing that conviction in earnings and a stock's return potential does require a degree of certainty about the future. So we as an active manager, we're certainly using a fundamental framework in order to evaluate the uncertainties that around tariffs that there are in the marketplace today. So in addition to our in-depth quantitative and fundamental research, we're also incorporating this fundamental research in terms of evaluating these tariffs. There are really three components, and we would say that we're evaluating, for example, revenues and the inputs to the different types of tariffs. Then we're also looking at the direct impact on profitability and a company's pricing power. And then some of the more indirect impacts would include, of course, inflation as well as where we are in the economic cycle. So that is broader research that we're doing today on a company by company basis in order to evaluate that risk. Now, I would say that as a portfolio and as a strategy, we are less susceptible to that tariff risk, mainly because we're overweight services and we're underweight goods. So, for example, within consumer discretionary, for example, we like names like Compass, we like names like Booking.com. The same is true within industrials. We like names like Relx and Wolters Kluwer. These companies give us that stable revenue that we're looking for in order to deliver on that risk-adjusted returns overall to our clients. So all in all, we would say that active management is vital I would add also within technology as a sector, we're underweight semis and overweight software. So although we're positioned like this, these aren't tactical moves. Our quality, stability, price framework has meant that we're actually that less susceptible to those tariff risks that are out there in the marketplace today.
How do you perform in weak growth environments, and how are you mitigating risk as well as participating in recovery similar to the one we have seen this week?
Well, in a weaker growth environment, clearly equities will be impacted. So I'm going to comment really on the type of equities that we look for. And it's very much around the types of companies that we're looking for are very much quality, stable companies, attractively priced. So those companies that have consistent cash flow, stable revenues, and as I said, attractive valuation. And when we look at research going back to 1970 all the way through to today, and particularly within that cohort of stocks, and we're defining weak growth as those periods in particular where the US manufacturing index falls below 50. If you look on the right-hand side, that relative return, 12-month post PMI falling below 50, actually the return is quite attractive. So we would say that that cohort of stocks that we're looking for in order to deliver returns do actually deliver in a weaker growth environment. However, having said that, I think investors have had to deal with many risks over the past several years. From 2022, we saw significant declines, and of course, 23 and 24, we've also seen significant concentration in the marketplace today. And really, the past few years are a good illustration of how we think about risk and return. So in today's environment, where we're really concerned with that tariff risk, we're mitigating that tariff risk to company earnings by focusing on stability. We're also mitigating that crowding with that price discipline and real strong valuation discipline. And then with regards to rising bond yields and even inflation, because we may see further inflation, we're leaning in on quality.
Teresa, are defensives still cheap, and how are you positioned?
Well, defensives are actually still cheap. So when we look at defensives in terms of stability as defined by low beta, but also valuation when it comes to price to free cash flow. When we look at how they're trading relative to history, they're actually trading very attractively. And then in terms of how we are positioned today with that, we're still underweight the US, and we're overweight Europe and overweight Asia. When we look at price to earnings over the next 12 months in particular, non-US stocks are trading at a discount of 30%. That average discount is normally around low 20s, around 22%. The same is true of European stocks or European names. So the lessons we would say that we have learned over the past 10 years or the past decade, as long as we've been managing this strategy, are still as relevant today. So even though defensives are cheap, we're still finding quality, stable companies at attractive prices across a wide array of sectors and industries. So we're not just finding them within healthcare or consumer staples, we're actually finding these companies actually within industrials, financials, and also within technology. That's really important, that diversification, in order to deliver that pattern of returns. We're also being dynamic on offense and defense. It's fantastic having that defense when the markets are declining, but we're also looking to outperform over the long term. We also want to generate that solid return over and above inflation over the long term. We're taking a long-term view. And then, of course, finally, that final thing about staying clear of trying to predict where the market is going to go. We don't really have that crystal ball, so we're sticking to our fundamental and quantitative research in order to find these names and in order to find these companies in order to deliver on that long-term return, but with that less risk overall for our clients.
Pues, Teresa, Keane, Product Director at Alliancebernstein. Thank you for joining us. Good afternoon.
Thank you very much. Thank you. Bye-bye.
Bye-bye. Pues cuando son las 5:28 hora central europea, nos quedan apenas 7 minutos para que se produzca el cierre del mercado de renta variable europeo. Pequeña pausa publicitaria. A la vuelta les contamos cómo despiden la sesión las bolsas del viejo continente, mientras seguimos muy pendientes de lo que vaya a pasar en las próximas horas en Turquía